What's up, guys? Welcome back to another video. Today we are talking about a SPAC that is gaining some popularity. I am going to make this a two-part series. There is a lot to cover on this, and I think this is quite an exciting time to look into Genius Sports Groups. So Genius Sports is a lending-based company, although they take data from sporting events and supply the data to sporting betting operators. So they actually take data on approximately 240,000 events per year, and they're the official provider of 170,000 of those events. Now, I wanted to read off a quick quote that they had on their website, and it says, "Global leader in digital sporting content and technology and integrity services. Our technology is used in 150 countries worldwide, empowering sports to capture, manage, and distribute their live data and video, driving their digital transformation and enhancing their relationship with fans." So if you don't know Genius Sports, they are actually massive in their own market. So there's only really two big competitors in their market, and I'll get later into that, although they have many partners. As we can see here, these are just a couple. Now they have, as you can see, three different sections: the sports, the betting, and the media. And they have some large contracts, and they're looking for the future. They have big, long contracts securing these deals for many years in the future. Now there's so many partnerships and deals that they have. I could not physically go over all of them because I would just drop dead. Although I did want to highlight a couple, just like the Premier League, the NBA, the NCAA, the PGA Tour. But they also have trusted partners to 500 sports globally, which is massive again. And they have 30 million plus fans engaging with their live data. So as we can see here, is their mission statement: to be the official data provider, technology, and commercial provider that powers the global ecosystem connecting sports, betting, and media. You guys can review, pause the video, and read the rest of that on their business. But I do think this is exciting because they are pushing to go public. This guy right here, the CEO, Mark Locke, says that he's pushing to go public because of a couple reasons. They wanted to list quickly and basically limit distractions in daily business. And of course, when listing, you guys get a lot of funding, and of course, they are in a rapid growth section in their business cycle right now, so it makes a lot of sense. Now, they are more than just a tech company. As I said, they're trying to build long-lasting relationships. So looking forward with their growth potential, it's honestly quite massive, especially with the growing sports industry, and especially once this whole worldwide event gets over with. I think that the sports market is going to come back stronger than ever. So as you can see here, there's 5 key investment highlights. You guys can pause the video and read over this like more in depth if you really want to. But I just wanted to show this. I'm not going to get into too deep on a lot of this stuff. I just want to preview it, let you guys read through it if you really want. I just want to provide you guys with the resources. Now, moving on, as we already said, they have over 500 sports partners, over 30 million fans that engage with their live data, over 150 different countries. They've been in the industry for a while, over 2 decades. Okay, so as you can see here, they have 2 different sections: their data acquisition and then their data monetization. Essentially, they take data from their partnerships with sporting broadcasters such as the Premier League, NCAA, the PGA Tour, as I said, and then they'll sell it to other companies like DraftKings, and then make money on that. They also are helpful in their review system, I guess. A lot of people have controversial feelings on this, although they help with the slow-mo videos and making sure the refs get the right call. So they are embedded in the sports themselves, which is really important because that is a massive factor in the sports. Now, in their 2019 estimate, they are expected to have $190 million in revenue, and they want to go public in the first quarter of 2021, listing on the New York Stock Exchange. And I think they're really strong because, again, as you can see here, they do sit at the heart of the sports ecosystem. As you can see here, with, again, their 3 different sections of their sports, their data and streaming, and their media. I touched on this a little bit earlier about their competitors, and as you can see here, there's one really real competitor that stands out, and that's Sports Radar. And as you can see, Genius Sports is just superior, at least through this graph that they provide here. The only one that they think that they can really improve on is their streaming solutions. But Genius official rights and technology strategy differentiate it from their competitors. And again, as I said, there's only 2 competitors that possess the scale and product offering to capture a significant share of the market. It's a very hard market to get into. You need a lot of funding just to even compete with these guys because they already have such a large market share that it's nearly impossible for smaller companies to really try to attack their market share. Now, their strategy strengthens partner relationships, and as you can see here on this quick little diagram, this is how essentially they flow from sports leagues, Genius Sports themselves, and sports books, and a little flow chart that helps you understand all the relations and how they facilitate their business. Now, here's some numbers for you. They are estimated to have a merger of approximately $1.5 billion, and they are estimating $330 million worth of pipe investments, and then just to top it off, $150 million of growth capital. And as I already mentioned before, they are trying to list on the New York Stock Exchange, and they are trying to go under the ticker GENI. So this is just a company to keep your eye on. Now, here's a couple more key facts that you guys might want to look into. Their finances are strong. Their technology is very, very strong. Their customer basis is loyal and reliable. And I believe that they have a really strong corporate or heads of corporate. Their CEO seems to know what he's doing. He's also a co-founder, which is really strong. He has been here from the start. Now, this is it for today. I will be posting a part 2 tomorrow. Stay tuned, and please drop a like and sub if you're not subbed already. Thank you for watching.